quiet, self-effacing, and modest almost to a fault. He's the kind of guy who's lived and breathed Dalal Street for over 35 years.
You just need to conquer greed and fear, and you're there. Half the battle is won.
And markets are not just about ratios and cash flows, they're also about psychology.
I agree completely that Flame is a school of liberal arts, and I think investing is the ultimate liberal art.
Let's talk about skill sets in terms of a portfolio construction. A youngster, 25 years old, first paycheck, wants to invest in the stock market. Would you tell him to concentrate his portfolio or diversify his portfolio?
If you look at all these people who made money, I think except for Rakesh, who was already a chartered accountant, the opportunity cost of most of these guys when they came in was not very high. The problem with the guys today is if he is an engineer, MBA, getting into the market, he has such a large opportunity cost. He's always afraid of falling off the bed. These guys were sleeping on the floor. They didn't have that. So they took risks which were high. At a young age, if you're learning with high risk, it's very easy. I wouldn't say...
Because the loss is minimal.
The loss is something that you can afford to take. You have a long life ahead of you.
To make it back.
And you have an ability to get occupied with something where you will get it quickly. So I would think that maybe you can start either being heavily concentrated if you are willing to be intense, or start a little more diversified and start getting concentrated. But surely concentration is eventually the way to manage your own money. You need to be in a minority, whether it is to get salvation or to make money on the stock market. I would go out to say that the biggest regret or the biggest mistake of most large investors will be that they didn't either buy enough of it or sold too early. Nimish once told me he owned 5% of Maricos, got out too early. Radhakishan said that if he had held on to his positions,
in Hero Honda and
Infosys, he would have probably been as good as he is now or better off. We really don't know. Siddharth says that his position in Infosys would have been worth what Cafe Coffee Day is worth for him today.
But there is a difference between managing your own money and managing the public's money, right?
Managing your own money is easier. It's like investing. I would think that managing other people's money is like speculation. It brings in an extremely more volatile variable into the game. And investing for other people brings in one more dimension to the game. I would shudder to think of investing for other people.
In terms of complexity of investing though, would you prefer a top-down approach or a bottom-up approach to stock picking?
For me, bottom-up approach has done much better. But I've seen other people do extremely well with top-down approach. And I would think that you have to realize what you're good at and then decide to do it. I don't think that only one works. Both work very well.
Bottom-up is well known. You look at a stock, understand its fundamentals. Give me an example of top-up whom you've admired, someone who's done a top-up approach.
I would say Vinod Sethi's top-down approach has been extremely good. When he came here in '89, he was a young kid. I was also young, but he was younger to me, and here's this guy coming and buying 5 to 15% of companies like Infosys and Hero Hondas and HDFCs and Z Televisions and Concords and BHPL.
The theory stemmed from what? Bullish on India?
Of course he was extremely bullish on India, but I remember he bought Gujarat Ambuja Cement. I was stupid enough to not only think but also write for the Economic Times, sell Gujarat Ambuja and buy Mysore Cements. The rest is history. So here is a guy who could see that it's a bottom-up thing, that Ambuja will do better. It's not only top-down.
Because the balance sheet was better, the management
was important.
Right.
He could see that Hero Honda had the wherewithal to fight in a competitive environment. And he could see that scale that it will go. Once again, a point of second level of thinking of two-wheelers becoming really huge markets. HDFC becoming really huge in terms of mortgages. Again, let me add here that a person can think that this is an ocean of opportunity unlike something else. So here is a guy who thinks that this is a company who is making 100 crore profit will go to 500 crore profit, and you can't have 10 guys with a balance sheet coming and hurting him. So if you look at India, a guy making money in retail, Kishore Biyani, is attacked by all the Tatas, Birlas, all the big boys.
That's capitalism.
You have Bharti Tele, one guy making money in telecom, all the big boys attacking it. But when a company crosses the 500 crore profit barrier, whether it is Infosys, whether it is HDFC, whether it's Hero Honda, you don't only get a multiple of the stock price, you get an expansion of rating, because these companies have proven that these are men, not boys. They cannot be attacked just because some Arab has got a balance sheet to try and hit them.
And that's where actually the money becomes wealth on Dalal Street.
That's where you can distinguish between those guys who could identify that here are these bunch of Infosians who are going to go out and become not only the largest software company, the largest bunch of boarding rooms in the country, bigger than Oberoi's or Taj. They'll have more classrooms than any school in the world, and they will be recruiting much more than any recruiting firm every year.
We'll take another break, Durgesh Bhai. We'll come back and chat some more with Durgesh Shah of Corporate Database.